Hi everyone, and welcome to this video sponsored by Microsoft, where we delve into the intersection of finance, technology, and sustainability. Today we have a very special guest with us, Helene Lee, a highly sought-after speaker and moderator at FinTech and Sustainable Finance forums, who will be sharing her insights on the topic of supply chains and sustainability. Now, throughout the episode, we'll be discussing the role of technology in driving sustainability in supply chains, the importance of transparency and accountability, and the risks and opportunities for businesses looking to create more sustainable supply chains. So without further ado, let's jump in with a quick welcome. So Helene, I'd love to welcome you. Helene is the co-founder and CEO of Go Impact Capital Partners. She is a seasoned management consultant and finance industry professional who has held various senior roles and management positions across strategic planning, marketing, and branding throughout her career, including tenure at global consulting firms like Boston Consulting Group and Willis Towers Watson. Helene is also a known influencer and a key opinion leader in fintech and digital transformation. She's recognized by Thomson Reuters Refinitiv as a top 5 Asia Pacific and globally a top 2 influencer in sustainable finance. She's received a number of accolades as well as a top 100 woman in finance from FinTech Times and a top 50 Hall of Fame global fintech leader. Welcome, Helene. I'm so glad to be with you today.
Thank you so much, Matthew. That must have been a mouthful to say.
Let's jump off with kind of an easy question. A big part of a company's operations and impact sits in the surrounding ecosystem in which it operates. Can you kind of just kick us off with what you see as the biggest challenges for supply chains?
That's a fantastic question, Matthew. And in fact, supply chain is a little bit like air, oxygen, sunshine. People don't think of thanking it until it's actually not there, and we realize how disruptive that could be. Supply chains are actually the lifeline of every business sector. It didn't really matter which industry sector you're in, but people don't think about it until something like a global pandemic, COVID, hit us. And then the disruption in the supply chain becomes so obvious. You've got piles of goods and sitting out in the ports, waiting to be, distributed. You've got disruptions all across. It really impacts the bottom line of all the companies. So I think the lesson from COVID really has exposed 2 major issues in supply chain. And I'm speaking generically here. The first one is that a lot of the tools and processes of supply chain that we adopt in supply chain are a little bit outdated, I would say. They were formulated a decade ago, and the world, of course, looks very different from that time, with or without the pandemic. But the pandemic just simply exposed the cracks of that so much more. Secondly, supply chain as a function, it really sits across a lot of business functions within a company, so that you need to mobilize a lot of different business units in order to get a small change or a small improvement going. And I think that in itself, that transversal view that a corporation must take in order to adopt a more sustainable supply chain is in itself quite challenging.
Yeah, so let's build on that idea of transformation. We're seeing out there a lot of new sustainability commitments and pledges being made around net zero, for example. Mm-hmm. Why do you think these challenges kind of go right up to the executive level?
Well, I think more and more people are seeing the fact that climate risk or ESG risks are actually business risk and financial risk. And hence, to mitigate these risks would, of course, be the responsibility of the C-suite. You cannot just say, oh, this is really the function of a chief sustainability officer, and that's it. Okay, over to that department to answer any queries or to handle the whole thing. It really calls for a much more collaborative, approach to drive it. And I do believe that to move the needle, as we keep saying, or to move from the talk to the walk, rather, there are huge gaps in between, and those gaps will actually be very important to adopt a cooperative kind of approach to do. And I think the top-down kind of initiative, support and buy-in will be very important.
I love that you kicked that off with ESG risks. And I think from a supply chain perspective, going back to that, I think it's very easy for us to wrap our heads around why a company like a retailer or manufacturer would have material issues in their supply chain. If you can't get the products, for example, because of a pandemic or some sort of extreme weather event, obviously that's a material issue. And there's lots of ways to improve impacts across suppliers. What do you think banks can do specifically to help drive sustainability in their supply chains?
Well, that's actually very interesting. In my career, I spent a lot of time living in banks, so to speak. And I would never have thought that the finance sector would be right up there in terms of carbon emission or carbon footprints by the supply chain. In fact, there are 8 supply chains that constitute over 50% of the global greenhouse gas emissions. I was quite shocked when I see that. Now, you would have thought that of these 8 supply chains, all intimately linked with our daily lives, food, fast-moving consumer goods, transport, you would have thought that those are really right up top. I think, most people would have guessed that. But who would have thought that the finance sector has a huge role to play in terms of its business travel? The amount of business travel generated by the finance sector, consulting sector, or other service-oriented sectors that don't produce goods, okay? They provide services, are actually quite alarming. And all that goes into the scope 3, carbon, the embodied carbon, which is very difficult to track and monitor, and the huge elephant in the room in terms of net zero, driving towards net zero. So I think that really, wakes me up definitely to the fact that the net zero journey, the decarbonization journey, you really need to look at a multitude of different processes and functions, supply chain being one that is right up there.
Yeah, so it really sounds like banks have kind of an opportunity to look at their own operational reductions in their supply chain. And when I talk to financial services firms, I often position it in kind of 2 ways. One is that first way that you're talking about, looking at sustainability and operational reductions for things like business travel, but also more ESG risks and opportunities in their clients as well. So turning the focus over to a bank's clients, how can financial services firms support their clients' transitions and help them modernize, to your earlier point, their clients' supply chains?
Well, that is a slightly more complicated question, I'm afraid. I think if I could just unpack it into 2 levels, there are lots of different capital markets, solutions that banks offer. So from a corporate banking point of view or from a private banking point of view, they are probably a little bit different. So from a corporate banking or institutional banking point of view, there are, of course, solutions such as green loans, such as sustainable bonds or green bonds or climate bonds even, that banks issue and banks provide to their clients, which if you've got a better sustainability practice or you hit certain KPIs, indicators, along that, perspective, then you get a more favorable, loan rate. So all these will, of course, incentivize companies to go green, as it were, because they will, their borrowing, their credit rating with the banks will be better. So that's one side of the solution, apart from the bonds issuance that I'm sure most people are quite familiar with. On the private banking side, the wealth management side, where I come from mainly, there are a couple of things. The ultra high net worth sector obviously are very keen to see that their capital, their wealth is being put to use to do something a little bit better than just earning a few basis points more here and there. And I think, the whole ESG investing has been a big theme for family offices, even for sovereign wealth funds, pension funds, and so on. So, large family office actually behave like institutional investors, honestly. There's very little difference that separates them. So I think from that side, a lot more on ESG offering, a lot more in terms of maybe even, discretionary portfolio management offering to offer these private ultra high net worth investors more opportunities to deploy their capital in sustainability related manners as befits their risk profile. I think those are mainly the broad the broad offering, if you like, for banks to intervene in this area. And actually, apart from the banking solutions, Matthew, I'm thinking that technology is also part of the engine, in driving sustainability, in moving the needle, so to speak. So do you see some of the initiatives from Microsoft's perspective, maybe, that you can share with us here today?
Oh, absolutely. So as you can imagine, Microsoft is working across a range of sustainability topics at the intersection of technology and beyond, with an intense focus on our own operations, our customers, and the world. And for us, banking kind of sits in that middle pillar in customers. One of the ways that we're helping our customers is through a first-party solution called the Microsoft Cloud for Sustainability, which is largely around connecting to activity data in order to calculate emissions and water and waste as well. Now, when I talk to financial services firms and banks, I often hear more advanced requirements on the business side, but much of it centers around data. For example, some banks may want to understand a real estate asset's climate risk based on their lending model, or they may want to help their clients understand climate risk in the supply chain. This happens in geospatial and spatial temporal data sets that are then analyzed. Now, of course, for supply chains, we're also seeing not a rebuild necessarily in the modernization. In some cases, our customers are doing that, but we're also seeing new technologies being layered over top in tools like Supply Chain Insights, which kind of brings together supply chain data. Ultimately, I think it's a little bit early to be talking about new technologies like generative AI, but some of those conversations are indeed happening in order to uncover qualitative data analysis as well. And I think ultimately where we're driving towards in financial services at the intersection of technology and sustainability is really data and trying to make more informed decisions. But I don't know that we're there yet. So as we kind of look forward, back to you, a lot of the commitments that we're seeing out there are really close, only less than 7 years out by 2030. Microsoft has commitments, a lot of financial services firms do, a lot of other industries and companies do as well. Thinking out to 2030, do you have any predictions based on where banks or supply chains might be? And are you optimistic about it?
Well, I think I'm prudently optimistic. I think that, to hit the 2030 goals, and we're already 2023, midway through 2023, I think there needs to be quite a substantial shift in terms of behavior change, in terms of mindset change. It's not just having more shiny new tools to capture carbon. It's not just having more shiny new tools to calculate carbon. And, it goes, to a lot of the technology, but also beyond that. I don't think there is one silver bullet that would say, this is it, okay? It needs to all click together. You mentioned geospatial data, the reliability of ESG data, so that it actually have a knock-on effect onto reporting and disclosure, and the trust and credibility for investors to deploy capital in an even more massive manner to plug the funding gap, which stands at $2.3 trillion a year, as we understand from the United Nations. That is not a small amount. It also plays to the mindset shift and behavior shift that as individuals, as corporations, and as policymakers on all these three different levels, it must all gel together. Otherwise, I don't really think that those significant gaps can be bridged very effectively to move from the talk to the walk. And really 2030 is just 7 years away, and it's not really a long time. And time is our common enemy, isn't it, Matthew?
Very much so. And I love the way that you wrap it up. I think if there was one common theme I think we heard across sustainability, supply chains, technology, and even looking forward, it's that, to your point, there isn't just one approach, and it really requires all of us at the table, as well as that capital, which is important to deploy responsibly. So as we come to the end of this video, I want to thank Helene for her expertise and insights on the crucial topic of supply chains and sustainability. We hope this conversation's been informative and thought-provoking for you, our listener. It's clear that the intersection of finance, technology, and sustainability is rapidly evolving, and businesses that prioritize sustainability in their supply chains will be better positioned for long-term success. As we move towards a sustainable future, it's important to continue these discussions and work towards practical solutions that can make a real difference. We very much appreciate your support and look forward to bringing you more engaging and informative content in the future. In the meantime, feel free to reach out and connect to Helene or I on LinkedIn. You can look us up and we'll be happy to connect. Thank you for tuning in, and we'll see you next time.